All right, awesome. Welcome to the Independent Investor Channel. My name is Ryan. I'm obviously a lobster. I got severely sunburned yesterday standing out on the golf course. I was not golfing. I was participating in my endeavor yesterday. I would have loved to have been golfing. I love it. Welcome to everybody in the group. Awesome to have you guys. It's 9 o'clock Eastern Standard Time. We do this every Friday. There's been a little bit of an uptick on the channel. I'm satisfied with that. That's pretty cool. I've invited a few folks into the live stream this evening, and I'll keep my eyes out for those folks. Really kind of had to digress a little bit. I know sometimes I get a little bit ahead of my skis with my dialogue, and I've had a few folks slow me down a little bit and say, well, hold on a sec, Ryan, time out. And if you guys throw the red flag or call a timeout, whatever you guys need to do to slow the discussion down a little bit. Some of the folks were asking me to explain a little bit more of the terminology about how I'm talking about using scale in the stock market. Now, dollar cost averaging is just a very fancy way of using scale that's appropriate for each and every one of you guys that are looking to try to get involved in the stock market. You guys tune in every week and we strike up a dialogue. I see a ton of familiar faces. I also see some new faces in here. I appreciate that. That's pretty awesome. But really just to strike up the dialogue, kind of get the sense of where we are in the stock market. I'm really kind of on a selling spree right now. I could be making a move that really pays off for me big. I'm still heavily invested in the stock market. For you guys that know me and have followed me for quite some time, I do have passive funds that remain passive. But as you build your accounts up and you start to go from one bucket to multiple buckets, I know I've got a Roth 401k in the group who's hitting me up with some questions, declared some profits in Yeti. I think that's a really smart move. I think Yeti's actually, the calls and that are implying that the stock actually goes down after earnings because it's up over 100% year to date. So when you get those profits, and you want to lock them in, they're not profits until you hit the sell button, and on the other side of the coin, you really haven't lost any money either. Until you've hit the sell button. So it's really cool. The whole turn on with investing is that even if you knew nothing, the luxury of controlling your hand is always with the individual investor. It always is. And I think a lot of the root on the channel tonight, I'm really going to stick to a script tonight that's going to help for folks that are brand new to the stock market. I know some of you folks have been investing. There's a few aggressive investors in the group. I see my good friend, the one and only Doug Whitaker. I welcome you. Always want to call him out. It's a super good supporter of the channel. Trying to always think of new content every single week to put some entertainment value out there. I'm actually fairly entertaining of a guy, but if you believe me, after 300 videos on YouTube, I still get a little bit nervous in putting content out through there. And I will always do the Independent Investor Channel, but I will not change my approach or who I am for anything. I again, using the conduit and the power of social media to get the word out there to folks, and really get people, out of the starting gate and starting to ask those questions. And when I talk about the starting gate, I'm really talking about people here who are dealing with barriers. And I probably could have filled up the entire board with barriers. And we're going to go over some of that. And a lot of people can't get out of the barrier column when they're looking to make sense of a self-directed program. Just the name implies means that I've got to take action. And it scares a lot of people off of it. And they don't even want to talk about it. When they hear about the self-directed solution and what's available out there, they don't want any part of it at all. Don't even want to hear it. And especially for you guys that have been following me a long time. I've got Ernest Alvarez in the group who's been following me a long time. I've got Michael Raver again, a lot of committed folks. Bob Wright's in the group, just some killer folks. I do have my good friend with the financial investor in the house here who's building his channel, really kind of powering a way of building his channel. I'm really proud of his efforts for sure. Wish him all the best in his endeavors. but you've got two of us in here so far. I've got Andrew Chapman as well in here tuning in from Australia. So good day to you. He's tuning in. He's got work, but I think he's got the live stream on representing some of our international partners here in crime in the independent investor channel community. Really just looking to strike up awareness about financial stewardship, understand what is available, not only here in the United States, but globally as well. If for nothing else, and you hear some of these things and some of these products that we talk about are not available to you, maybe you didn't even know that they existed, and they are in fact available to you. That's information that, you know, from a global perspective, there's a ton of people who tune into this message during the live stream, to be quite honest with you, but a lot of people will tune in after I post it up to YouTube. And for that, I appreciate, but I think what they're looking to do is understand some of these cutting edge products that we throw out there, you know, like Robinhood, like Webull, all the products that I openly advocate for. Also the affiliates, you know, the programs that we throw out there, M1 being probably the most popular option. And finally, First Trade, you know, with regard to your options trading, your lightning fast stock trade, all of which are free of charge. So it gives you some of that entry level exposure to the stock market free of charge. And that type of stuff falls under the solutions side of the house. And I've had a few people get back to me. They're happy with First Trade. I've had a few people get back to me and say, well, the mobile app sucks. And that type of criticism, I'm all about it. I'm an open book. If you think that you don't like something about a particular platform, you got to let me know that. That's wonderful. But you have to have realistic expectations about a platform that offers free access to the stock market, where the status quo would almost have us believing that we can seek out a strategic edge from a financial planner. I've got one coming tomorrow because April is supposed to be Financial Awareness Week. And, you know, she's coming here, financial planner, and is going to try to sell the program to folks. And I contend, again, that introducing that intermediary between you and the stock market really in its core is not worth it, okay? If you're investing to make money, don't ever rationalize paying an intermediate, because if you can just understand the links between your barriers and your solutions over here, if you can just identify what links are going to help you overcome your barriers or your weaknesses, that's really going to be the key. And for you guys that tuned in to the savings of $400,000 over, you know, a 40-year cycle, that type of stuff happens every single day. People are going in and they're opting for financial planners. How do you think Edward Jones has $1 trillion of assets under care? Okay, it's assets under management. And they don't like the word management. I've said that many, many times. All right. But I'm going to kind of get to the group here. That's kind of my intro. I want to welcome anybody who's making their way to the live stream this evening for the first time. Welcome to you guys. I've had a lot of new subscribers come to the channel, and hopefully they're engaging and taking advantage of the information. If you're not a social media person, I'm there with you. I'm not a social media person either, so don't worry about it. We can be non-social media people together, okay? And you don't have to say a word on the channel. All you have to do is just kind of understand that I define the status quo very, very specifically in the investing world. Why do I do that? Because I've been part of it for the last 25 years. Now, out of those 25 years of investing, over the last 7 years, I've been investing on my own. Okay. And I've kind of coined the phrase self-directed investing. All right. We've secured the domain name self-directed investing. Please don't go there just yet. The site is under construction. I'm still actively searching for someone. If you guys saw the advertisement from Ryan Scribner's also looking for someone who knows WordPress. So if there's somebody here on the live stream that knows somebody that knows somebody that knows somebody, I solicit for that stuff openly, and I believe in that type of stuff. I've got some stuff on WordPress that I really just need to, it's on there already. I just need to make sure that it's compatible with some of the mobile applications. So when somebody opens up their mobile app, it can show well. what I intend on doing is writing some in-depth articles about my interactions and some of the mistakes that I've had. I can't talk about the fact that I took a $10,000 check into a broker one time only to have that broker sell me on C shares of a particular mutual fund and not even invest the money. The market went up over the next 3 or 4 months, and I came back 3 or 4 months later and said, what happened to this money? I've made like 3 cents in interest off of this 10,000, only to find out that the money wasn't even invested for me. And these are supposed to be the people that a lot of people, when they're relying on the status quo to overcome their barrier, because they think that this is the only conduit to the market. This is the big misconception, and not understanding that there is another very, very big and viable option out there. And all you have to do is just become aware of it. Now, it might not be for everybody. And I'm not saying that financial planners don't provide a valuable service. All right. The question is that service over the course of a lifetime worth hundreds of thousands of dollars? That's a rhetorical question that I can only ask that you guys attempt through your journey on the Independent Investor channel. Answer for yourself. Okay. I've already answered it for myself. I offer my testimonial as open as I can with regard to the multiple buckets, the goals and the objectives that I'm trying to take advantage of in the stock market. I'm going to pulse into what my current pulse of the stock market is this evening in whether or not you're going to buy or sell stock. Okay, that's the ultimate question right now. And I just want to give you a premise to being careful about the stock market. There's a few folks that are buying some high growth, some high beta. If you're making money, I'll be the first to applaud you, because investing is about money. All right. The bottom line is about making money. And if you can accelerate your money, then I'm all about it. And I'll be the first to applaud you if you come on and you say that you took some profit in a stock here and there. So we've got a very robust group in here. I'm going to scroll to the top and see if you do have questions. Please throw them my way. We can open up a dialogue. I've seen some pretty interesting stuff for sure pop in the group, that of which I'll try to be as thorough as I can as I work through, give everybody their shout outs. Thank you so much for making your way on a Friday evening. If you don't have anything better than to do than to get a financial awareness piece here on the Independent Investor channel, I'm humbled and I'm honored that you've made your way in here. But keep in mind, remember, the whole goal of opening your eyes to this topic and perspective about how to approach money. I expect that you're going to turn the live stream off at some point after watching it week after week. If you don't tune in every week, that's okay too. But I expect that you'll turn it off and be like, wow, he said a few things in there that really affected me. Am I really maximizing my opportunity? Am I really taking advantage of everything in the investment opportunity that I possibly can? Am I as aware as I need to be as to how overcomable some of these barriers are? Do I have the links and tools necessary to overcome the barriers? And finally, am I aware of the cutting edge solutions that are out there? Most people are going to say, well, I'm aware a self-directed, a Roth IRA is out there, but am I aware that a self-directed Roth IRA is different than a managed account? Okay. And for a lot of people, that's an eye opener right away. So give yourself a chance to evolve in your thinking, challenge the status quo as far as what we have now, and kind of where the industry is moving with more passive products and the importance of some financial savvy to add some single stock exposure to your portfolio, neither of which I believe are really on the top tier agenda of a financial planner to sell you guys when you go sit down with them. Remember, they want all of your cash, and they want to put that cash to work in mutual funds that can return a benefit. But unfortunately, there's always a side agenda available for those guys as they get compensation for the products that they sell. So you have to kind of question those objectives and whether or not those objectives have your best interest in mind. And I would contend that an individual typically has their own best interest in mind better than anybody, myself included. But I provide a testimonial. I give you guys really all I've got as far as the way I act upon the stock market moves that I'm making, why I'm doing them. You're not going to be right every single time. But I tell you what, I'm right a lot of the time, and especially a majority of the time. And that's really all you need to do to be successful in investing when you're as rock solid on your plan and approach, and as liberated with regard to the wealth preservation piece, the saving, the ensuring and insisting that your program has low fees in it. Where are you at with your fee structure? Do you even know? Are you paying 0.2% or are you paying 2%? Industry average is 3%. Are you one of those folks that are on the higher side? When was the last time you took a look at that financial statement that they send every single month to you, that you just take and you file it away, or you shred it and don't even look at it? There's some pretty alarming stuff on there that I've helped a lot of people understand, that those charges are made by the financial institutions that are available to investors like myself that are self-declared, self-directed investors, and those services are free of charge. So most everybody out there that are going with the status quo and what they think is normal in the financial industry are paying for services, that of which most of the folks in my community are getting for free. For example, dollar cost averaging, dividend reinvestment within the portfolio, portfolio reinvestment, which is a feature of M1 that's really, really cool and unique. So I'm going to cruise. I got Bob Wright again here in the group. Andrew Trapman, who's a channel creator as well, deals on the topic of precious metals, which I did drop in the Facebook group. And if there's anybody that was part of that thread in the Facebook group about my intention maybe to enter into more of introducing some precious metals into my portfolio, I appreciate all the responses. It was pretty cool. No more than 5% is what I'm kind of looking at. So the option that I choose, I'll keep to myself, but I am interested in dabbling a little bit and taking on some exposure in precious metals. So I've got Iman name in here, and says that he took some profit in some stock in Yeti, 20% over. That's awesome. We are still in an environment to where if you want to take some off the table, if you're in the wealth of building phase, you are definitely in a phase of the stock market where you can go ahead and take some profit off of the table in some names, look to fight another day, put it to work in another asset if that's what you want, or use it to fund your cash pillar within your bucket so you're ready for a rainy day in case that happens. I'm going to cruise on down here. I've got K97 in the group. I've got Cole Kramer, been in Ford since 853. So the valuation on Ford has always been pretty attractive. I'm not a big auto investor, to be honest with you. It's one of those subsectors of industry that I don't get into very often. Airlines are typically kind of in that. I've invested in rail before and I've made good money. That's fine and dandy. But Ford just surpassed Tesla today in market cap at 41 billion. Tesla fell with their horrendous quarter. I don't even know why we talk about Tesla on YouTube. It's just a crap company. I really want to curse, but they make a phenomenal product and they're very poorly run. So if you want to invest your money in that, go ahead. I'm probably not the channel you want to listen to if you want to invest in Tesla. And justify doing so. There's so many other better companies out there to actually be an investor in. And, investing in Tesla is not investing, in my opinion. It's speculation. That company can't even get out of their own way. So just, kind of keep that in mind. I think Tesla has got a real world of hurt in front of them. I really do. They're going to have to raise capital, and it's going to be harder to do if their stock is going into the toilet. It broke some real technical resistance today. I don't know why it gets so much media attention. I know people are happy with the product, but the best thing that could happen to Tesla is have it bought by GM. That would be the coolest thing ever. Make some shareholders really quite wealthy. That'd be awesome. 3M obviously dropping. I think I posted online. I've held 3M for quite many years. I've held it now for a little over a year, I'm sure. It's kind of a core industrial holding. It's one of those companies that's diversified within the holding itself. They're involved in a ton of different businesses, and they suffered a little bit from the world, from the global economic downturn, which is just one of many indicators that I'm kind of looking at right now. And I'm having a hard time justifying why people are insistent on being so aggressive on the stock market right now. If I were in my car and it was a stick shift, I'd be in second gear, maybe first gear on the stock market right now. Literally, I am not in sixth gear. My foot is not on the accelerator. So for you guys that are starting in the stock market, I was talking to a colleague of mine at work, and I said, for the folks that have got less than $25,000 of investable assets involved in the stock market, you really don't need to be worried about timing the stock market, okay? But for you folks that have six figures in the stock market, maybe $500,000, maybe even seven figures, y'all are crazy. I mean, if you can have that seven figures in the market and you're not worried about taking a huge haircut because you have other assets, maybe it's a portfolio of real estate, maybe it's a portfolio of precious metals, perhaps maybe you've had some inheritance that's really helped justify why you can keep that exposure on the table. That's all great and plenty, but a couple things that you'll notice about my perspective is I always speak from the perspective that if I was in that position and I'm making moves right now in my own personal portfolio as if I was managing that much wealth myself, okay? That's why I offer that opinion to say, good grief, I mean, what are you expecting on the upside from the stock market? You're a winner. Aside from a few hiccups over the last 10 years, what are you looking to milk out of the stock market? Are you looking to squeeze a little bit too hard? You know, are you up $250,000 in the market? Are you up a few $100,000? Have you maneuvered with the portfolio too much and tinkered with it? Are you only up $150,000? You know, what more do you want? I mean, I've taken a swing since last fall's downturn. I've taken an economic swing of about 47,000. So, and that's with very little maneuver. A lot of trimming back on this way up is what I've kind of done. There's been a couple times there where I've been pretty heavily aggressive with the stock market. It was a little bit of a risk. You take on more risk for more reward, and it worked out. There's no guarantee that those type of moves on a stock market in this condition are going to always work out, okay? But certainly 3M is one. I was in the black maybe for 10 days before it reported really just not a very good outlook on the global economic side of the house. I'm still holding. I only own 10 shares of it. Probably a buying opportunity for anybody looking to get some diversified industrial exposure. 3M certainly is one of those that you know, dividend aristocrat that you can buy and own long term. I'd be half tempted to pick up 5 shares right here. If you're looking for a cornerstone in the portfolio, 3M most definitely fits that bill as a quality company. So I knew 3M was going to come up as part of the discussion as appropriate. I know it should, it warrants it. When a large company like that takes a hit the way that it did, certainly worth coming up at least on a Friday live stream. So I've got Tim Tellers, who's just a heck of a good friend of the channel. Has known me for a long time, close to the inception. I think Tim was probably one of the original, maybe a couple hundred subscribers. I don't want to offend Tim because he was really one of the first subscribers. It's really cool to see you. I'm so excited for number 49. He's probably talking about his draft pick. I don't know. I asked how Pittsburgh did. I don't even know who Pittsburgh got in the draft. I think that's who you're probably talking about, but what does 49 mean, everybody? I think he's talking about the NFL draft. That's just my whack at it. I don't know. They do have a nice dividend, at least for now. So yeah, no, I think we're good there. Ford's dividend is solid. So I've got Cole Kramer. I'm not sure if I recognize, but I'll make a shout out for you. I like to make the live stream personable. I do a pretty good job of including everybody and making sure when I'm not doing my rants or I'm not doing my structural lesson for the evening, if you take 1 or 2 things out of these live streams, and if you don't like the style, I typically go for a couple hours on the live stream. I typically go on my live stream until I'm ready to fall out of my chair, because this is my favorite topic to talk about. Anybody who talks to me about finances know I'm pretty passionate about it. I've been thanked multiple times through the course of the channel and in person for taking the extra effort to help folks, because until I start to find some justification for myself that people do not need assistance, then I'm going to keep doing this channel. And that statement I do not make lightly. I don't. I do make that statement full well knowing that that could potentially mean that the Independent Investor channel is going to be here for the long term. That's just how it's going to be. Along with my community supporters, I've been with Financial Investor for a long time. Brent's been with the community for a long time. I remember when Brent started the channel. So pretty cool stuff. Made some real good friends through social media. And folks that I think probably have the same goal in mind of just sharing some stories about how they approach the stock market. All of us are pretty different, but I think the key is to find some themes. We're all pretty articulate with what we do. We're all students of our game. I would consider most of us teachers of our game as well. As Bob pointed out, he says, I'm a good teacher. And I responded and said, that's because I'm a good student. I don't mind saying when I'm wrong. I don't mind saying when I don't know something either. And that's kind of what you need to do as well. All kinds of different personalities in the investment world, and the financial planners really have to come across as the experts. They really do. And I'm not saying that they're not. But it becomes very, very easy when you do a profession for a long time to really buy into what it is you're selling to people as being right. My question rhetorically for the group is it right? Is it right? I tend to try to cut through some of the BS and some of the gray matter and separate the gray matter into black and white, okay? Now, for me, guys, that means finding the truth, okay? And if, in fact, the bottom line is a 2.4% expense year over year, then we can take that real dollar effect and rest it against our benchmark of what we're hoping to gain year over year as far as a year over year percentage of return in the portfolio. What I mean by that, for example, is if the fund that I owned, let's say I owned the S&P 500, let's say I owned an ETF, and I was able to gain 8% on that over that year. Now, in a managed account, if I pay, let's say 2% expense, I'm not making 8%. I'm now only making 6%. To make the example very simple, in a self-directed account, I make that 8% minus the expense to own the ETF itself, which is typically around 0.03% for the ETF that I use all the time in my examples. And a lot of you guys might think, God, Ryan, what are you talking about? 2-3%? That doesn't make a whole lot of difference. Make no mistake, one of the real solutions over here that we're looking for is the compounding effect. That's why we invest. We invest to achieve the compounding effect, to allow us to meet our financial goals down the line, okay? So if we're just, by nature of choosing our program, electively giving away the farm by saying 2% really isn't that big deal, I'm happy with the 6%, we're really kind of setting ourselves up for some planned failure, and you really have to be careful in justifying that. Now, some of you guys may justify it and say, you know what, if my potential return is $1 million, but I want to have representation over the course of that time, then know what those numbers and the effect of those numbers are going to render at the end of your life. No, don't guess. And certainly don't make the mistake of being naive on the effect of that money. There are very simple exercises that you can run through to figure what the impact of those expenses are over your money over the long term, especially. All right. Don't look at it for short-term validation. Don't look at it and go in and meet your financial planner, and after 3 days, you're telling all your friends that you're with your financial planner and you're so excited about it, okay? It's going to rear its ugly head the longer that you're with that financial planner, and that's how they get a lot of people, is that they don't feel the short-term effect until they've already run the course of their life and they're looking at what what their decision rendered in regard to their portfolio and how it's performed over the years. All right. So Forward's dividend is solid. Very cool. Cole, again, welcome to you. Glad to have you in the group. What do you guys think about Kraft? I'm holding Kraft, and I'm actually building a position in it. I'm happy to do so. Little position. I'm not getting too crazy with Kraft. I think I've only got about 30 shares right now. The dividend's still solid. I'm cool. They're getting rid of some of their divisions. My beloved Orida is being sold, but I think that's what they need to do to try to reduce their debt. That's kind of where we're at with Kraft. But again, I'm really looking to take on light positions in stock, if any at all, right now. I'm probably 40% equities right now, 50% cash, and 10% fixed equities for you home gamers that are keeping track of the portfolio allocation, which is another kind of tool that we're looking at here in determining what your risk profile is. I know I've always openly advocated and been open with my risk profile being about a 7. With this current state of the market, I would adjust my risk profile down to about a 5 right now. With this market, I feel so much better having the money that I have invested in the stock market is working effectively and efficiently the way that I want it. But if this market does in fact do what it's proven that it can do 44 times over the history of the stock market, all right? Now, if this is going to be the one time that the market doesn't go down and it just continues to go up forever, then so be it. I'll take that risk. But I'm going off of historical precedents, all right? And if this market does take a downturn 30, 40%, I'm going to be absolutely in the money to make that run toward $750,000 in my portfolio. So again, I just want to cruise down here and get to everybody. Bob says it might be a good buy, certainly not overbought. I agree with that with Kraft Heinz. Let me cruise down, see if I can't get any questions for me. Again, if you're new to the live stream here, throw your questions at me. Let me know what you're thinking. There's been some cool questions already with what to do with Yeti up 125%. That's interesting. Again, the one and only Doug Whitaker will probably offer the stock pick. I don't know if he's having really good luck with engaging in some more speculative trades in this market. But I tell you what, as I scour this landscape of the stock market, there's a lot of places where people are making a lot of money right now. I'm one of them, relatively speaking. I know there's a lot of people, but when the market does turn south, you're going to see those opportunities dry up big time. All right, you're going to see good companies get hurt. And I don't mean to scare you guys, okay? If you come on the Independent Investor channel expecting me to sit here and tell you that it's all about roses, it's not, all right? There's no minor league investing. There's just the major league stock market. There's the New York Stock Exchange, the NASDAQ. And that's all we've got, all right? And as good as it can be at sometimes, it can be downright brutal at other times, okay? And it doesn't do anybody any good for me to come on and just remind people, look, if you're up in your portfolios, take a hard look. Look at where you're at. Look if there's a potential to trim down and prune down the fruit tree, all right? Prune it down a little bit. It might look weird for a while, but it will have more potential to grow and bear fruit down the line if you do end up taking a little bit of profit off the table, all right? Now, depending on where you're at in your portfolio, you can decide and say, yep, Ryan, I'm good. I looked at it. We're good. We're on target. You know, I own 25 shares of Coca-Cola. I'm good. I'm up 8%. I'm happy with it. It's paying me a 4% dividend. I'm good, right? Those are the types of things that I want you to objectively always look at and monitor. It's going to make you that much more powerful. It's going to make you that much more educated. It's going to make you that much more aware, because the last thing I want to see is conveniently naive people who just throw their money into some stocks. They take my advice. They start a self-directed account. They throw their money in there. And the second that it goes down, they haven't looked at it, haven't monitored it, haven't reevaluated. They look at it and they're down 20% and they want to come back and throw their couch through the computer at me. All right. And it's amazing how I get a lot of love when the stock market's doing this. Okay. I can tell you how much hate I got into last year. Okay. Why is that? Do people really hate me? No, of course not. I'm a nice guy. Okay. I'm a freaking nice guy. but they want to kill me because the stock market's going down so heavily, and they're looking at it and they want to blame somebody else. They don't want to look in the mirror and say, geez, listen, maybe I should have spent a little bit more time paying attention. And those are the discussions that we want to have right now, in the calm of our Friday evening, in our open community discussion, and say, you know what, the market's continuing to go on this, whatever it is, okay? But I've been around the block, and a few folks that have invested with me for, the last couple decades anyway. When we look at digesting this information piece, there's a difference between bad information and good information. And I'm going to do my very best to help you differentiate between the two. All right. If you're selling Apple stock to buy Tesla, all right, I'm going to give you my opinion. That's the most idiotic move you could ever make. All right. That's just my opinion. If the move makes out and that trade works out, then so be it. It just so happens to be a good trade. All right. But the interesting thing about running a social media platform is that you have to understand that there's people on the other line that are consuming the information, and they're looking for that credible information that hopefully that you can take and deploy in your own life. Because here's the thing, I'm not going to waste my time coming on and consuming content from somebody if I can't take the information and put it to good use in my own life. I would love nothing more than for you to put this information to work and say, hell yeah, I found this information on YouTube. Why not? Why not? Why is the misconception such that you can't find good information through a testimonial like mine? I mean, I've declared my numbers through the internet, that of which a lot of people will charge to be part of a stock market blah blah course, and I'll take your money so you can see my incredibly amazing, unique portfolio. I just don't think it's that big of a deal. Why? Why do I not think it's a big deal? Because I honestly believe that if I can do it, anybody can do it. Anybody. I started with $25. I've said this many, many times. And there's a lot of people out there who are really going through this self-doubt. They're looking at the news media, telling them constantly that they have to go seek out representation. They're hearing it from their friends. This is a big one. You're listening to somebody on YouTube about your finances? Shut them off quick. They're going to take all your money. Seriously. I mean, try it. Try my test, man. Go tell your friends on next week when you're at work that you caught a really awesome live stream on Friday and you're thinking about maybe deploying some of the techniques and strategies that were discussed regarding investing on your own in the stock market. You'll probably get laughed out of the building. Seriously. That's the status quo that we're going up against. All right. That's the misconception, because again, I'm more interested in the truth. Okay. If it's absolutely the best option in nature to go into the strip mall and sit down at an Edward Jones, or sit down with a Citigroup, or sit down with a financial planner at Wells Fargo, if that's absolutely the best option for individual investors, right, then I'll shut the channel down, okay? I'll walk away from YouTube. I have no problem with that, all right? That's not the truth, right? The truth of the matter is those buildings exist for a reason, and they don't have to have customers in those buildings to make those businesses work. They don't have to have customers in those buildings to build more buildings so that people can go into those strip malls or those Wells Fargo branches and sit down with those financial planners that, in my opinion, charge way too much of individual investors. That's just my opinion. And you can validate those findings for yourself. I've already done so. And we're liberating the portfolio as appropriate, as a lot of you guys who tune into me and understand where I'm coming from. I don't know when I'm going to be at $500,000, but when I do, I'm going to be open about it, and I'm going to be humble about it, because that's just me. I don't really care so much about the dollar amount. Here's the measure of success, and I really want you guys, if you stuck with me for now 40 minutes, I really want to get this off of my chest a little bit for you guys, okay? The measure of success is not that I've inherited $500,000, and I come onto YouTube and I proclaim to be a $500,000. It's not that I've made $500,000 through ad revenue, through YouTube, and then I come on here and I pose as a phenomenal investor and you guys look at me as some sort of stock guru, okay? The measure of success for me personally, what means the most to me is I, number one, don't come from money, okay? I've been given nothing, all right? I've been given a lot of things in life, but money and financial head start or a financial boost or any of that stuff, make no mistake, I started in the negative hole, okay? Been in hock with the IRS twice, not once, but twice, all right? Have had some trouble with debt, have had some trouble with penny stock trading, all right? So that's kind of the cloth I'm cut from, is that, all right? So when I measure the level of success in my life, I started my career at about 26 years old, okay? So the measure of success for me is where I started from and the degree of separation from the path that I would have been on as a single income person making less than the median income in the United States and where I'm at now. It's the degree of that separation. It's the fact that I'm staring down $500,000 and I've done so as a wealth builder. All right? I really want you to take that home. If nothing else, you get some entertainment out of this live stream. I want you to ask yourself, if you're one of those folks out there and you're making $35,000, maybe you're making $55,000, maybe you're making $75,000, and you're working on some of these barriers yourself, barriers to entry. Maybe you think that you got started too late. I can't tell you how many times I've heard that one. Ryan, I'm started too late. I'm started too late. I don't know anything about the stock market, but I'm willing to start. Man, get over that. It's okay. You know, and it's amazing to me how many people out there have the same potential as me. They just need to find it. It's all they need to do. And sometimes the easiest and hardest thing that you can do is find that starting point for yourself and take that little leap of faith. And for a lot of people, man, it's about finding this one solution right here, man, the self-directed Roth IRA. It's about starting it. You might not have all the answers that you need initially. You might not have them all, okay? But keep in mind that the prospect to have those validations enter into your program as you evolve as an investor, they're gonna be there, okay? It's just, you gotta have the vision to see those as they come, all right? Because I can tell you a lot of people will tune in and a lot of people do tune in. And I mean, I just blocked somebody from the channel for making a smart ass comment to my channel because I don't have time. I don't have time for that. I would never go on to social media and just try to stir up garbage and drama. I'm just not into that, okay? I'm in it to get in and get out. You guys know that for 2 hours, I'll get on here and I will not stop talking for 2 hours. Why? Because the topic in and of itself is infinite. It's infinite. There's too many discussions being generated on our Facebook group. There's too many people that are hitting me up and they're like, Ryan, I want to start, but I don't know what dollar cost averaging is. And that's all right. It's all right, because you're not the only one that doesn't understand some of these terms. And until some of these terms start to become commonplace, we're going to continue to trudge on in our mission and building a community of self-directed investors who have the core understanding, okay? And they don't live in this world of barriers. They typically live over here in fine-tuning their solutions, okay? They're constantly moving back and forth between the links or the tools, all right, to get to fine-tuning their solutions, all right? And when you start to duplicate these solutions up, that's where it really gets killer. When you start to introduce multiple buckets to your portfolio, how many people out there, let me ask you this, if you're new to the community and you like what you're hearing, how many out there have thought that it's possible for them to own 5 investment accounts? 5. Not a checking account, not a savings account, not even an employee-sponsored 401k, not maybe even an additional self-directed Roth IRA for yourself as a single person or for your spouse, all right? How many of you guys have thought about not only maximizing those accounts, but also adding an additional layer? How about an additional layer on top of that? How many people look at that cash savings pillar as importantly as I do as a very, very structurally important piece to your portfolio? How many people look at your portfolio and have a really strong fixed equities position to help define your risk profile? All right. Think and Grow Rich. It's one of my favorite books. All right. I really should put it on Amazon as an affiliate, but it's really one of my favorites. And I tell you what, growing wealth, it isn't always about just taking 20% in Yeti. Okay. That's a great move, but you've got to think like a successful investor all the time. All right. Don't toot your own horn because you're taking a 20%. You can come on here and I'll tell you that's a good trade. That's awesome. All right. But always be thinking about that next move, that next investment. Okay. Become a better investor, become a better stock analyzer, become a better portfolio builder, become a better wealth builder. All right. Evolve in your thinking. Move as far away from the status quo as you can possibly get. Why? Because the status quo is full of the herd. Okay. And the further you break away from the herd, all right, the more unique your benefits are going to be. Okay. Because again, remember I talked about the separation and the degree of what I was inevitably entitled to making $50,000 a year. And I got to tell you guys, I started with $25,000 when I got into my career. Okay. So a lot of you folks out there, I mean, if you don't work, okay, that's going to be a very difficult bridge for me to gap for you. I would try. I would go the nth degree for anybody that's fallen on hard times and then maybe in between jobs, etc. I get it. Why do I get it? Because I've been there. I've been there. I've had jobs where I've been in between and not being paid. You go for a month or 2 or 3, you've never been paid, go to the ATM and it doesn't automatically spit out money to you, right? I've been there, okay? And it doesn't take very long for this to start to rear its ugly head and sink in and tell you maybe you're just not cut out for this side of the road. Maybe success isn't for you, all right? And I can tell you what, this right here is a hell of a lot easier to buy into than that. Okay, just kind of keep that in mind as we're working through the exercise and the dialogue, man. Make sure that you're hitting me up with your questions. Appreciate there's quite a community in here. If you haven't hit the thumbs up button, please do so. Help us support the channel. I'm still in my obligation. Somebody asked me, so the next couple weeks I'm still going to be kind of tied up. So don't expect that the upload schedule is going to change a whole lot. I'm really trying to be strategic. I'm really trying to put good quality content on there. Not really editing. I did away with the start of the video, so I jump right into it. I think that's catching a little people's opinion right away, so that kind of helps. Trying to keep the videos down at around 10 to 12 minutes on YouTube. It's hard for me. You can see I can talk for 2 hours with no problem on the financial topic, but I tell you what, if there's one investor out there that hears one little inkling of what I said, then if you go back and watch video number 1 out of the Chronicle of the Independent Investor channel, I'm fairly certain that on that number 1 video, I said that my goal was to empower one investor at a time, and I mean that wholeheartedly. That has been, and always will be the goal of the channel. So if there's people who come in the live stream who kick off and they're tired and they don't want to listen to me rant, no problem. All right. No problem. I love you just as much. But if there's somebody out there that's not commenting in the group that's hearing me out and saying, Jesus, hold on a sec, man. I'm 21. If I can just sidestep some of the mistakes that this guy has already openly declared and said, dang, I made some mistakes. I fell flat on my face multiple times. If I can just avoid some of those missteps, do you think I can maybe have more success than you do? Yep. Yeah, you can. You can. Because The scary prospect are for those community members that tune into the message that are younger. And I know I've got some folks just out of sheer principle in their 50s, 60s, 70s that love the idea as well. They invest and they're doing great things. But they've earned the right to do that. They've lived some life. They've got some assets. Their net worth is worth it. So they hear my program and it's like, yeah, hell, I'm going to do it just on general principle because I don't like giving away my money. If nothing else, I've learned over my lifetime that anytime you introduce somebody into your life, you're going to pay for that service, right? So a lot of my community, they'll prescribe to the message just on principle. But for the young folks that are tuning into the channel, it's almost as if I'm putting myself into my 20s, man, and I'm giving myself advice, the advice that I would want to hear if I was a young person, all right? If I was that young person that was 18, 19, 20, 21 years old right now and potentially coming across my message, one of 1,000 people, I honestly believe if you come across this information, you've won the lottery, because the smart folks are going to hear and they're going to say, what do you mean by risk profile? What is he talking about? How do I determine my risk profile? Can I understand my risk profile right away? Or do I have to become an investor to know my risk profile? Do I have to involve as a risk tolerance to sharpen my risk profile? How do I get started? I'm hungry. Help me. All right. Those are the type of people that we're trying to get to, really try to empower the next generation. And I hope we're empowering the next generation of folks that are going to take this wealth building strategy and they're going to do good things. Because I'll tell you what, I don't do this to screw around. All right. This is serious business. This is your entry to grow wealth slowly and responsibly. All right. This is not get in, jump in, and I'm going to tell you 5 stocks or 3 stocks to buy per month. And if you do that, you're going to be wealthy later on in life. I got news for you. You do that type of crap and you'll probably fail. I'll let it sink in for just a little bit so you can put into perspective some of the misinformation, some of the garbage that you get through social media. Let it sink in a little bit. All right. Let me cruise into the group here and see what we've got. Somebody says jalapeno ketchup is good. I don't know if that's worth buying Kraft Heinz for, but it's been pretty frustrating, that's for sure. I've got Team Axon is such an interesting stock. I should have never sold it a month ago. Coulda, shoulda, woulda. Now, come on, you're going to have lots of those. It's going to be a good growth stock to sell later down the line. Same with Yeti. It could be. I actually think Yeti's going to go down from here. Okay. Great company, great product. People love their product, as I do. I love my Yeti. I have it sometimes on my independent investor channel live stream. But I think the stock's going to go down. Okay. So don't get too overzealous on your high growth beta names and get surprised that it just doesn't go up every single day. I think Apple's going to start to go down. Okay. That's just my thoughts. Myself and Brent in the financial investor channel kind of had a little sidebar, and I think we sold some Apple stock, liquidated some pretty good profit, no doubt. I think I was up 27%. I think he was up just about the same. He may have me beat. I don't know. If he got into the stock at the 435.40 level, then significantly more gains than that. But I think I actually drew it down once, so just to bring down my dollar average. It wasn't 130, 140. I think it was more 170-ish, something like that. But took some profits off of that. I think Apple's going to start to go down. So took some profit. It's not going anywhere. If I want to buy back into it later on down the road, I will. Now I'm on a monitoring posture of the stock, and we'll see if it helps me out. We'll see. Doesn't matter. I'm a winner. I made $1,000 on the position. It's fine. I got Sam Ike in the group. Welcome to you. Awesome to see you. Investment future finances. So please, if you're a channel creator, certainly, and if you are, and there's community members, there's usually about 1,200 people that come across the live stream after. So if you are an investment channel, welcome. I thank you for taking your time and coming and supporting the community. I hope you don't expect me to get up and dance like every other YouTuber, but I'm a rare breed, man. I started this channel 2.5, 3 years ago. up in New York City. That was kind of the inception of the Independent Investor Channel. I had a family member bring the idea my way, and it's been on ever since. So I do have a really good question right below John Brandt. Hey, Ryan, thoughts on Dave Ramsey and his principles? Yeah, so I have a dual opinion on Dave Ramsey. I think on the debt consolidation piece, I don't want to say too much about my profession, my career, what I do for a living. For most of you guys who follow me, do know that, and that's totally fine. But we've actually brought the program particulars into our organization and used them. And I can tell you most of the benefit that come out of the Dave Ramsey philosophy is more on the debt reduction side. How do I know that? It's because we take a data call at the beginning of those classes, and it's typically best served for a couple who are just starting out potentially in life, who maybe aren't even investing yet, maybe working on that the conditioning, because I always say you have to be conditioned to enter the market. But when they start the Dave Ramsey course, maybe they've got some college debt, maybe they've got some unsecured credit card debt, those types of things, and they're recorded at the beginning of the course. And by the end of the course, it's amazing because we'll take it's an 8-week course, and we'll take the statistics at the end of it, and the debt reduction that takes place over 2 months is alarming. It's just amazing. So for that very purpose, I don't know if I would necessarily just credit Dave Ramsey with being a debt consolidation shepherd, because I think people have the potential to do that on their own, okay? The strategies that I teach are in line with that very thing. You can get as creative or not. See, I'm not as down on credit cards as Dave Ramsey. I'm actually a proponent of credit cards and building your credit, especially in the United States. That just happens to be the society we live in, and I've got a lot of free benefit from doing so. Now, on the investment side of the house, I'm night and day. Okay, I don't agree with some of his philosophies. I think Dave Ramsey has made millions and millions of dollars, and I may be wrong on that, but he makes a very lucrative. At 1 million subscribers on YouTube, you're making some killer money. Okay, now. Am I going to anoint somebody the stock guru by just giving out advice to go buy mutual funds because you can outpace the market? I don't, but remember how I talked about the truth. The truth. All right. Now, if I'm wrong and Dave Ramsey does not have a rogue of people behind him, behind the curtain, all right, offering these products and getting a kickback for these products, then I will eat crow. I'm not wrong. All right. And that type of thing is really kind of crazy to me. There are products on the market right now that allow you to cut out those philosophies. If I love those programs that come out like mine that say, go with Vanguard. I make it very easy, but you can go with any ETF, low cost ETF, passive, whatever it be. You can seek out your exposure on the large cap value, large cap growth side of the house. You can buy single stock if you want. Hell, if you're interested in bonds, go that route. But make sure you do it as a self-directed investor. Don't do it because I told you to do so. And don't do the mutual funds because Dave Ramsey told you to do it. Research it. All right. And I'm telling you, there's enough justification there on the investment side of the house not to follow those principles because they're geared toward putting a person on a pinnacle as if they have all the answers and nobody out there in the world has any knowledge at all, and they have to crawl to this person to seek out their epiphany and awakening to have success in the stock market. I don't believe in any of that BS. I don't. All right. So I do apologize if my answer doesn't line up with what most people think. I think most people would say that he's very helpful. If you can gain some help from any individual, whether it be Dave Ramsey or anybody else on YouTube or any other information that you find on social media, on the internet, great. If it helps you, I'm all about it. That's fine. But when there's a side agenda there, okay, that's when you really kind of need to step back and say, what is this person trying to do by just saying the only way that you can succeed in the stock market is to taking these mutual funds that supposedly outperform the market every single year? Well, have they outperformed the market over the last 10 years? How long have they been around? How have they done historically? When were they incepted? What's the 10-year rate of return? More importantly, what's the inception year-over-year rate of return? For example, if you get the 10-year rate of return and it's 12%, then they've provided about 3%, 2% of alpha over the S&P 500 in the mutual fund. Great, right? You're outpacing the market. Wrong, because you failed to consider the expense ratio within that mutual fund, right? So now you're back to even. You might as well just have taken the passive exposure and the lower fee, right? So Dave Ramsey really just doesn't seem like a magician anymore. He just seems like another fella, right? Yeah, I appreciate the question. It allowed me to elaborate on how I don't really put people on a pedestal. I don't, all right? The only people I put on a pedestal in my community are you guys, because I need to realize potential in you that you don't see yourself. All right? Been going a little bit over an hour. Thank you for that question. That's pretty awesome. It's good for a basic investor looking at Dave. I can agree in part, again, on the debt reduction side. I would consider you smart to go and farm out your options if you're a beginning investor. Don't just jump on Dave Ramsey because your friends say that that's where you need to go. And he has a reputation. Reputation doesn't mean squat to me. Reputation is something that can be very, very powerful in leveraging your own agenda. And got to be very careful with that type of thing. Okay, you really do. I would contend that for the most part, the folks who have tuned into me for the last couple years would support and resonate with my idea that individuals probably have the best answers for themselves. You just got to find them. Okay, if you hit one of these barriers or one of these roadblocks, throw it in this community. I'm really, really good about smashing right through barriers, and I can do that for you. Not a problem. Not a problem at all. World famous Doug Whitaker. Absolutely. I'm waiting for that stock pick of the week to get thrown in here. I need to take a whack and just take like a roll of the dice one of these weeks and just see if I can hit one of these. No, they reduced the pink sheet trading with Merrill Edge, so I don't do much of that anymore. I'm still holding the 500,000 shares of my penny stock, and if it ever goes up, I'll end up getting wealthy, and we'll be transmitting the Independent Investor channel from an actual studio, which is my ultimate dream. That's what we'll end up doing that someday anyway. You guys will get to come back and watch some of these live streams and remember how we started from such humble beginnings on the channel. It'd be pretty cool. But maybe, who knows? I don't know. I failed so many times at life. I'm used to it, man. So if success ever came my way, I don't know what my humble personality would do with it, to be honest with you. That's some real talk. Follow Dave Ramsey until you're debt free, then follow Ryan. Yeah, you'd be better served to doing that. I agree, Bob. Thank you. I would go one further and say, look, just take some of these particulars. I try to really think about those nuggets that you can take and justify for yourself. It doesn't necessarily have to be because I said so. I try to do away with that stuff. I really do. I see tidbits of it on the channel all the time where people are like, that's awesome. You got me fired up about investing. I'm going and I'm doing it. And I know in my heart, if I asked them to kind of repeat back to me some of the stuff that I contend they have to know before they jump into the stock market, they couldn't tell me a freaking bloody thing about, what I've taught them. And it's just like, I understand that. And I know you'll probably fall into some success. The risk that you run is if you do end up finding some of that success, what are you going to do with it if you're not prepared for that success? If you don't have your mind mentally prepared to accept that success? Do you think that you can just jump right here from having a ton of barriers to being bestowed upon a bunch of solution over here? That's why people who win the lottery end up broke, right? Because they go from a ton of self-deprivation and then, oh my God, I'm a millionaire. I'm going and buying the house and I'm buying the cars and I'm giving all my money to my family. because I'm rich and it's an infinite supply of money. It's not. Somebody who's built up wealth over time is so much more powerful because, to be honest with you, there was a time in my life where I didn't have any money and I was just as happy as I am now. It's so far removed of the physical thing of the money. It's so much more about the plan and building a plan that's successful. And every little success that I have, like selling Yeti for 20% profit or 100% profit, those little wins I chalk up. And you got to chalk up multiple wins. Chalk them up. All right. Pay attention to your mistakes too. You're going to chalk up a few mistakes, but pay attention to what you did to get into that mistake, right? And don't freaking do it again. All right. Or take a different approach that maybe allow you to make some profit and circumvent that mistake, right? Be strategic about the stock market, man. It's not going to give you any sympathy. All right. That's one of my favorite quotes from Warren Buffett. You can worry about a stock all you want. It doesn't care how much you worry. It doesn't care. All right. Doesn't care. If you've lost $1,000 because you decided to take an aggressive investment, maybe you didn't. Maybe you have the best stock out there, Kraft Heinz Food, General Electric, right? And you bought it and it went down. It went down big, right? It doesn't mean that you're a bad person. It just means that you made an investing misstep. That's it. That's it. Get over it. Have a short memory in the stock market and invest like a robot. All right? That'd be some of the best advice that I can give you. It takes a very, very robotic approach to the stock market to win. Don't get emotional about, acknowledge it. Be happy that you're up 20%. Hell, that's a win. I'm all about it. That's great. All right. But don't dwell on them. Always focus on those next moves that you got. Very important. All right. 3M spends so much on research and development. That's a good thing, in my opinion. And yeah, they do. That's why I think they invented Velcro, didn't they? Been watching for a couple months, but the first live stream I've been able to watch live. Cole, thank you for your time. Certainly, if it's your first live stream, take advantage, man. I've been around the block a few times. I can certainly help you, and if I can't, I'll say I don't know. I've got a ton of people in the community here that are just solid. Quite a few people in the community who are better at investing in certain aspects of investing than I am. So I don't hesitate to push some of those technical questions off, especially on the tax side of the house. But 3M always a buy. I think it will drop to 140 this year. Geez, I hope not. Thank you for that. I just saw one of my devoted, I recognize the screen name. I think that is Dream. Who is that? That's Queen something. I'll get to the bottom and see it, but thank you for that. I just saw it pop in there. I appreciate that support. Thank you so much. I appreciate it. Maybe I said something that motivated you. Maybe I said something that will make you not sleep tonight. You ever have those nights where you lay down in bed and you're just so excited about an idea that you have or something comes into your head, you just can't sleep? No? I'm the only one? All right, great. All right, I'm embarrassed off my own channel now. Fantastic. Collectible reviews. If someone wants to get into stocks, what percentage of cash should be invested right now with the market as high as it is? That's a just phenomenal question. Phenomenal. And if you're new to the channel, because I don't recognize your thumbnail there, I typically use a pie or a circle to answer this question. And let me use the example of $1,000, if you would, to answer your question, okay? I know these videos hit YouTube all the time. If I had $1,000 here, would I invest? I'd invest in these 4 stocks, or I'd buy this ETF or whatever. Just bull crap, all right? Because the market should tell you a little bit about how you're going to seek the right level of exposure that's in line with your risk profile, okay? I say risk profile, it's the same thing as your risk tolerance level, okay? What I mean by that is if you had $1,000 and based on the current condition of the stock market, I think everybody in my community can come together and we can come to a consensus that the stock market is at an all-time high right now, okay? Right, wrong, or indifferent, okay? It could continue higher, it could go lower. But right now, the stock market information that it's giving it is that it's an all-time high. And you're sitting there and you've got $1,000 to invest. I would say take 20% of it. 20. All right. Start a self-directed Roth IRA account that will springboard you from zero to something. Now, if I was in a 30, 40% recessed bear market, through a bear market in a prolonged recession, I would tell you to take the $1,000 all day and invest it. I'm assuming that you're a young person. Okay. Now, if you're 40, 50, 60 years old, my approach might be a little different based on other assets that you could potentially have. All right. But the $1,000 right now, with the current condition of the stock market, if you said, Ryan, I'm 20 years old, I've saved $1,000, I have an aggressive risk profile, I want to invest $500, what do you think? I'd say I'm all about it. Okay. But here's the thing. You take half of your investment capital and you're putting it to work in a relatively high market. The way to add to that program and wealth build over time is to not only take that 500 or take the 20% like I'm talking about, to put $200 to work, put the $800 aside, take $25 a month, $25 every 2 weeks, and funnel that into that account and buy the S&P 500. All right. If you're just starting out in the stock market, that's the fundamental way of approaching stock market. Here's why. You take $200, you put it into a self-directed Roth IRA account. If you're a young person and you have a 40-year time horizon, if you've watched my video on saving hundreds of thousands of dollars by taking advantage of this low-fee solution, the wealth preservation piece that I talk about all the time, I know you're going to be a winner. So why not just pick the S&P 500, the VOO, which is the ticker symbol from Vanguard's ETF, put $200 to work and dollar cost average it. Okay, set it up for dollar cost average. Do your $25 every 2 weeks, $25 every month. Hell, that's what I started with. All right. So now you've got the dollar cost average program free of charge. Okay. Pick an account that's going to allow you that solution to be put into that account free of charge. We don't want to charge a broker for setting up that account to do dollar cost averaging and then take 5.75% out of every $25 that you contribute every month. You think I'm lying? I'm not. That's real talk, baby. That's what they do. All right. And a lot of people they'll charge you, they'll take your $200 and put you into 4 mutual funds so they can take the 5.75% on each of those $50 increments. It's sick. Why do you think I came out with the channel, man? The stuff is crazy. Look into it, validate it. If I'm totally wrong, please, I'll eat crow, but I'm not. I'm right. All right. So the $200 goes in there. Now you've got the dollar cost averaging. You've got a starting amount. Okay. You've accelerated and gone from 0 to 200. You are diversified because you've bought the ETF from the VOO, the S&P 500. You're diversified. The last thing you want to do is search out the account function to allow for dividend reinvestment. And the 2% that the VOO is going to pay you is going to allow you to accumulate partial shares, and it's going to start your dividend reinvestment program, your DRIP, all right? And it's going to start you on the path to compounding wealth, all right? If you've just heard what I said, I've covered everything. I've covered the correct bucket, the self-directed Roth IRA account here. I've allowed you and put you on a path for $200 to low fees. I've done something that the financial planners will not do. I've allowed you to take $800 of pay dirt, money that you've worked very hard for, money that I contend $1,000 is a lot of money. And if you're going to expose 20% to the stock market because you think that it's at an all-time high, which I would agree with you, now that's wealth building. That's how you approach the stock market. Approach it from all angles. Approach it and attack it from all angles. All right. Now you've got a savings account with $800. You have investments in the S&P 500, passive as it may be, that's returned 8 to 10% over the last 10 years, maybe sometimes a little bit higher. Okay. You're diversified. You've got the DRIP going. You've got your DCA, your dollar cost average program, and you've got it set up in the lowest fee possible way that I can recommend to you, man. You're looking at a fee of that ETF of 0.03. And if you want to check the effect on that money, check in my every single description of every single video that I put out. I put the Trading Academy's compounding calculator in every single one of my videos. It is the single most important tool to understand how to work, because you can compare the effect over that money. Put that $200 in there. Man, I watched this guy on the Independent Investor channel, Ryan. Hell, I don't even remember his name. But he said, if I invest $200 now and I'm 20 years old, or I'm 30 years old, or I'm 34, I don't know how old you are, put it in the compounding calculator, and then put the effect of a 2% fee and a 3% fee in there and compare it to 0.03. You want to talk about not being able to sleep tonight? Do that. All right. That's your homework right there for asking that question. Run that through the compounding calculator and tell me what the difference is down the line of 40 years. Okay. And then tell me how excited you are, because you're going to be up and you're going to be like, holy crap, I cannot wait for Monday. I cannot wait to go from a non-investor to an investor. I hope you heard my answer. That's awesome. Thank you for the question. That was pretty legit. For the dividend, yes, and their products get used all the time. They're not going anywhere soon. I agree. You guys are still talking about 3M. I own 10 shares. I've accumulated 2 shares, I believe, of the stock over the last year I've owned it, and made it's a pretty high dividend, 4.5%, I believe. I don't know. I'd have to pull it up and take a look-see. But I'm glad to own it as part of my industrial exposure to the portfolio. All right. Financial investor, what do you know about HSA account, health savings accounts? I think Brent does know quite a bit about him. He's the right guy. I'm sure he answered it down below. Kevin, message retracted. That's too bad. That's too bad. I hope you added and rephrased your question down below, man. I'd love to address whatever you had to say there. Avi A, happy Friday. I love Fridays. Pretty awesome. I'm waiting for M1 to offer. That UFO ETF looks interesting. I don't know what you're referring to there, Mike, but I don't look at M1 very often. You guys know, and I told K9, I think last week, that I was going to share that portfolio. I just remembered now. I apologize. I didn't do that. Just now ringing the bell, actually. I'll throw that in the Facebook group. How I use M1 Finance. I turned one of my colleagues on at work and wanted to know how I use M1. And you guys know I've got the spider portfolio set up, all 11 sectors. 14% is the highest one at technology. I believe the lowest one is materials, and everything in between, utility staples, discretionary, communications, energy, all the way up the line, financials, healthcare, industrials, all the way up the line for my exposure to all the different sectors. I've got I've got $1,600 basically split up between the 11 sectors, real estate. So another way that you could potentially split up that $1,000. I just went on for 10 minutes about how to take $200 and introduce it to the market. That's just how I think. I'm a strategic thinker. All right. I can take any amount of money and kind of break it down, and based on what the market is turning back, there's a solution that makes sense for you. It doesn't matter that it makes sense potentially for me. I just run you through that exercise to get you to kind of think about all the aspects to it, because a lot of people, as I did when I approached the stock market, I've got $1,000. I can probably buy maybe 1, maybe 2 stocks. Does it sound familiar? And you don't approach it like I do and say, it's okay to do $250. Freak it. Put $750 in your savings account. Put it aside for a rainy day, because the market's kind of bonkers. Hasbro is thrown in the list here. It is killing it. I've been looking into them myself. I've only posted a bit on it. That's what I was looking at. I've got Mr. Allen 94. Anyone got the mail saying First Trade is finally revamping their online app? Wasn't happy with it. Felt like it was designed 10 years ago. I agree that the mobile app really doesn't have a whole lot of functionality. I can tell you that I do use my online app for Merrill Lynch, who's it's not Merrill Edge anymore, guys. It's Merrill Lynch. So that they went back to the old name, and the mobile app from Merrill Lynch is freaking phenomenal. Okay. So I had that large broker to compare to First Trade, and I use both M1 Finance and First Trade. You guys know I have taxable accounts in both, just for the sheer sake of growing wealth with you guys and proving that it's pretty easy to get to 10,000. I just passed over $4,000 in the First Trade account. but I typically use the mobile app just for monitoring. I'll check in on it maybe once during the day. And if I want to do any type of trading, I actually use the actual the main website to go to. It's actually quite good. I guess my response to you is if you're really unhappy with it, and it's one of those things that you really can't stomach, it not having an advanced trading app. I can tell you that most people that go through Bank of America, Fidelity, TD, etc., all those larger brokerage, they have a hard time getting free trades with smaller account balances. Okay, now I don't want to misspeak. There's a lot of brokers out there that you can sweet talk into free trades. Okay, I know my broker is not one of them. You've got to have the incentive threshold starting at 25,000. I think you'll kick in at about 30 free trades, and then when you get up to the $100,000 level, you can trade 100 free trades, which is basically unlimited. But First Trade does offer unlimited free trades, and they're quite fast. I've executed quite a few trades through First Trade just to establish the portfolio. I haven't really done any trades since then, except for adding to my existing positions. But do keep in mind that it's a free trading account. And when I'm looking to align this solution here, I want to make sure that they offer this, which Robinhood does not, right? Okay, so a lot of people would come back and say, Robinhood has the greatest trading app out there. I can trade stock on my iPhone. Yeah, well, they've also got a lot of people in trouble because they've ripped through 300 or 400 or 500 transactions in a year, and they've got themselves into tax trouble because they didn't offer this. Okay, so a little bit of a trade-off there when you're talking about somebody like the person who just asked me about $1,000, and that's all they've got to invest, and those entry and exit fees can really piecemeal you away a little bit in some of the larger brokers. I know even Fidelity's down to $4.95, or TD Ameritrade is down to $4.95. So if it's something that really does bother you, the aesthetics of the mobile application, just ask yourself what you demand from your broker, because what I demand for a new investor is the access to the stock market, okay? Because if you own the VOO, the S&P 500 from Vanguard in First Trade, or you own it in Merrill Lynch, it's the exact same thing, okay? You don't get any more benefit or any less benefit than having it in one broker or the other, okay? So it's that no cost to entry to those for the new investor that I'm looking at. And one idea and solution that I do offer is, and I do agree with you with the application, I'm interested to see what they come out with. I really don't put as much value in the mobile application. I put value in it on my larger brokerage because I do trade over my iPhone. I do, okay? And it does mean a lot to me on that side of the house. But here's the thing. If you're a new investor and you got a couple years under your belt with maybe a First Trade or an M1 Finance or both, or that's your primary broker, and you build that up to 25,000, 50,000, maybe even 10,000, and you feel like jumping ship, it's very, very simple to do a rollover from that account to a larger broker. And that way you're working toward that optimal status, maybe that 25,000 with a Merrill Lynch, right? And then you start to enjoy some of those free trades and those services that would normally be charged of somebody with lesser of an account, you'll get to enjoy free of charge. And that's why initially when I came out with the channel and everybody was asking me, well, who's your broker? Who's your broker? Who's your broker? I always had to say Merrill Edge, but they always charged folks that were looking to just start out. And that's why we were so aggressive with offering those solutions through the channel, because both of those, M1 and First Trade, offer the Roth IRA. So I thank you for offering your comments. It's freaking awesome. That information is very, very valuable to me because I need to hear those opinions from consumers of the product. I need to hear that. All right. Got Ernest in the group who pops in, and he's a man of many, many words. He always says hello, and I will say hello. Good evening, Ernest. Good stuff, man. I was doing the math. If you wanted to get paid $1,000 every month, it would take 31,266 into O at a current price. And remember when O was in the 40 to 50 range. Nice. I opened one, but still wanting to learn more about them. Where at Fidelity, good stuff. Guys are talking with them amongst yourself. I got Daniel Martinez in the line who says, hello, K97, what are your biggest holdings of O? I know you guys are talking about O here. I can't say that I own O. Let me cruise up here. I see Riley popped into the group here. Riley's another channel creator. Thanks for coming in late. I'm sorry to get to you late, man. This always pops in a bunch of comments at the end of it, whatever. I'm looking to use and abuse YouTube. It sure as hell doesn't support me. So I'm going to use and abuse it and throw it out when I'm done with it. So, but as long as I can reach my community members, I'm happy. As long as they can keep pumping my stuff through the airwaves, I'm happy. Let me cruise back up here to see if I can't find, yeah, it's Mystery Queen. Yeah, I knew I recognized that. She's the only one with the thumbnail like that. Good stuff. I've got Brand Factory Media. Holy smokes, man. A long time no see, man. Just a long time supporter of the channel. Great to see you here. Pretty awesome. Pretty awesome. He reached out to me at an established channel when I was like maybe a baby channel. I had like 100 subscribers. That's great to see you in here this evening. Good stuff, man. Another thing is I would never do the snowball. The avalanche is the only way to save more money and pay off debt faster. I agree. Some pretty good mobile apps that help out with that. And also to Dave Ramsey, Warren Buffett, and Jack Bogle both say that you should just buy an S&P 500 and hold that. Totally agree. I don't know if Dave Ramsey says that. I don't follow enough to make that generalization. I've got one of my folks in the group that I was conversing with this week. That's very cool. I'm reading The Millionaire Next Door right now. Highly recommend. Totally agree. See some new faces in the group. Very cool. Great to see you guys coming in, joining in with the community, stoking up a dialogue. I try to stoke it as much as I can. Keep you guys kind of excited on the topic. For most people, finances is boring. I think that making money is absolutely not boring at all. I think it's quite entertaining. It's about as good as a hobby as anything to do. Just try to pass some of that knowledge on to everybody else. Got player one in the group here. Just look at how Robinhood really makes money. Yeah, I don't, it probably pissed me off, to be honest with you. So I'd probably keep me away from that. I just think based on my few seconds of what it did to people, I was good. I never recommended it. I kind of saw through that. I think I opened a lot of people's eyes when I came onto YouTube and was like, stop investing in it. One day you'll be adding Tesla to your portfolio. I could. The product is phenomenal. Don't get me wrong. I just think it's a poorly managed company, right? Elon Musk is a genius. I think he's got his head up his ass at the same time. So if he's such a gangster, hire some people who know how to run the company. That's, great product. He doesn't care. He doesn't care. And I don't want to own shares in a company that does not care. So that's a cool comment. Thank you very much for pointing that out. Okay, I may hold Tesla in my portfolio someday. However, it won't be because there's a YouTube channel out there that recommends Tesla every month. All right, it won't be for that reason. It'll be because I do a fundamental and I'll do a fundamental and a technical review of Tesla and justify buying it on both. Okay, and until that day comes, I will not own Tesla in my portfolio. Yeah, if you're 21, it might be okay. Good. I'll get back up to my starting point. I've got Larry Massa in the group here. It's the first time I've seen his. Do you need to invest in small caps if you have the total stock market index? No, you don't. I'd consider supplementing the VOO with a VB. That's probably justified, and maybe even a foreign holding, maybe an emerging markets ETF. You could do that. You could supplement those, supplement the S&P 500 with a small cap. Not the VTI. The VTI the VTI is built to where you just need to hold that exclusively. You could have $500,000 in that ETF and be okay with it. So really good question. Hey man, M1 doesn't allow in-house conversation. You have to sell your account and go through your bank and then reinvest. Okay. Ryan, I have a question, though anyone can answer it. Which metric do you prefer to look at, PE, EV, or EBITDA? Actually, the PEGI ratio, price to earnings to compared to the growth year over year, is my favorite metrics to look at. A factor of 1 or less, companies undervalued. Factor of 1 or over is potentially overvalued. I've had more success using the PEGI ratio than any of the 3 that you looked at. I've been burned with financial PEs of 10. I've had success of PE of 60, 70, okay? For example, American Tower REIT, I just took up on a 30% tear, made it killing with it. If I had bought it on PE, that was a 60, 70 PE. Very, very high multiple, made killer money with it, right? But financials, I tell you what, I'm really persistent, but I'm so sick of buying these banks, man, that are trading at 1.5 times book value, trading at PEs of. Now, I did buy some insurance companies. Prudential was trading at like 6 price to earnings. MetLife was trading at like 7. I made a quick $100 and I sold the stock, maybe 200 in Prudential. I don't even know, and got rid of the stock. But I try to be a little more flexible, I think. I hope my answer helps you understand my perspective. There's no right or wrong answer. You can buy a stock based on your PE ratio and be burned. You can buy it and be successful doing so. But don't make it your sole decision maker. I tend to look at a lot of different things. I'll glance at the PE. I'll probably give it 1 second when I'm going through and looking at, what I'm looking at with a stock, looking at all the ratings, reading about the company. Typically don't really scour over financials, to be honest with you. I've been very, very successful as an investor, just looking at the best quality companies. So, for example, yes, 3M has come up in the group. I still don't mind being an investor in 3M, okay? Even now, after the stock has went down, I'm still an investor in the company, all right? I don't need to look at the PE. 3M is probably over 20, So it was a really good question. I hope that answered it for you. But the PEGI ratio, PEGY, is my favorite metric to look at when valuing a stock. All right, let me cruise on down here. See, I might have skipped a middle section of this comment. And for that, I do apologize, but I'm going to wrap it up. I'm going to try to stay at minute 45 tonight, these 2-hour live streams. Ryan Calhoun hit me up again and asked about Cisco. I took huge profit in Cisco, huge being 12%. I recommended Cisco through the channel. It was just way, way too cheap. Took it up on an upturn. I sold Intel at 57. I got lucky right before they reported a terrible quarter. Took profits in Intel, very good profits. Got kind of lucky there. Got lucky with Cisco. Investing in Cisco is easy. Investing in Intel was easy. If you guys took any advice that I took out there, you might have taken some profit home on Intel. That was an easy pickup in the mid 40s. Any thoughts on a 4-hour work week? Yeah, lazy. True workers work all the time. Look at me, I'm working right now. I'm having fun though. You gotta have fun at your job. Ryan, I have a question on this. Okay. Yeah, okay. I'm gonna scroll through here, guys, and try to get to the end of it. 21 years old. Okay, so now I didn't know your age, and now I do. So Cole Kramer hit me back and said 21 years old. Now I don't even like the word homework. Okay, I didn't mean to patronize you, but I tell you what, man, you're 21 years old. So many 21 years old have a very, very hard time hearing the rant that I just put on you. And I did 25 years of knowledge all wrapped up in a 10-minute rant for you. So I hope you appreciate it, because I probably gave you an invaluable 10-minute lesson. Invaluable. Okay? Do yourself a favor, go in there and find that compounding calculator that I pulled on the Trading Academy. I provided on all my videos, and run that exercise that I talked about, man. You'd be glad that you did. Change your life tonight. Yeah, and hopefully you can pay me back by just doing one thing. If you feel empowered at all, then I will have been reaching my goal tonight. It was awesome to have you come in here, and congratulations. You've just been given a key to financial success in your life if you really heard what I said. Now your job is to go validate it for yourself, all right? And tell all your friends to come and see me as well. That'd be awesome. I need rogues of 21 years old coming on here and learning the fundamentals of wealth building. They need to know this stuff. They don't need to pay somebody to do it. They don't need to follow somebody on YouTube and join a club to learn this stuff. It is available free of charge online. Okay? So it's the only way that I could really sell this with a clean conscience is that this information is not rocket science. Okay? It's publicly known information. Unfortunately, they take advantage of these barriers that people have, and they make you think that it's so difficult that you need some sort of professional representation to help you get over your own barriers. Or you can keep your barriers, but you have to pay somebody to get you over here to the solution side of the house. I beg to differ. So congratulations, man. That's awesome. Well, thanks for coming in and stopping by in the community. Good stuff. 22 years old. Us young guys appreciate you. It's not 22. Yeah, I just recognize your thumbnail because I know I responded to you on one of my videos, and what can I say, man? Congrats. I don't mean to toot my own horn. I'm a very humble freaking guy, but this stuff works. And for you guys that are in your young 20s, guys and gals, okay, the power is yours. I don't care where you come from. I don't care what you do. I don't care what your ethnicity is. I don't care what you think your capability is. All right. Money and success can find anybody. All right. And that's part of the beauty of it. If it's the root of all evil, I don't buy into that. Can money buy happiness? Yeah, it can. So get over all you think about the status quo stuff and start to buy into a new way of thinking about money. All right. Congratulations, you guys, for finding the channel. It's pretty freaking awesome. I'm so stoked for you, man. Laugh out loud. I wish I started investing. I got investments, future finance. That's okay. All we can do is kind of give back. I cannot complain about the position that I'm in right now. The reason I'm in the position that I'm in right now is because I took proactive steps when I was young. Okay. I've always been an investor. I've been an investor for a long time, but I gave away a lot of potential earlier on in life that's affected my compounding interest later. And I don't beat myself up over it, guys. A lot of people will go through their life and they won't invest a dime. All right. So just please understand that if you're willing to take a little bit of a journey for yourself and justify, putting yourself on a program earlier on in life, you don't have to start with everything under the sun. As a matter of fact, at 22, there's just be a few $100, man, at a DCA schedule of 25, maybe $50 a month. You're up into 7 figures. All right. You want me to get you to 8 figures? I can do that too. Just going to have to be a little bit more aggressive with your funding and your starting amount, and you're going to have to be freaking disciplined on a plan. But those numbers are achievable. I don't just throw them out there willy-nilly. They're only achievable through the self-directed program. All right. You want to go with a managed situation and you want to say, man, this guy got me all fired up about investing. I'm going to go down to Edward Jones and invest. I'm going to bop you on the top of the head because you didn't hear a word I said. All right. It's only possible through the self-directed program because you're going to liberate your dollars and you're going to allow it decades to grow unobstructed going forward. All right. Very important. All right. Oh, well, holding 50 in Tesla. What a gong show. Awesome. I think that's good. The Roth is what I've been doing. I also have a Robinhood account, but I've been transferring cash out of that account. I hate it. That's surprising. I do have people that use Robinhood that like the app. Okay. Just don't get me wrong. If you're going to use Robinhood, use it as a brokerage account. All right. One of my friends in YouTube, Nate O'Brien, invests with Robinhood. He likes it, but he uses it as an opportunity to have a taxable account, a brokerage account that he holds stock long term. That's the correct way to use it. All right. The improper way to use Robinhood is to download the app and put $50 into it and just start trading stock because you're going to turn that $50 into $50,000 over the next week. All right, that's the improper way to use it. And I give a radical example, but I've had a lot of people that have come to me and they've been like, Jesus, in 2016, I racked up 300 or 400 trading transactions in the year. What do I do, Ryan? And I was like, well, you need to figure out how to get the 1099 from Robinhood into your tax software, because the tax manna cometh. So one day, Ryan, you'll be adding Tesla to your portfolio. I just like that comment. It's awesome. I think that was the one Kevin probably pulled off the community to start. Probably pulled it off of there and was like, I'm going to piss this guy off. But nah, not at all. It's funny. Why do you hate Robinhood? I think that's the question, and all good. Now, in all sincerity, I just explained, I have a lot of people in the community who use Robinhood. But up until the last time I checked, if this is still in play, they do not offer retirement accounts. If that's changed, please correct me. And somebody can put that in the thread. If they've changed that, which if they're smart, they would have, offer retirement accounts. And I just think it got people investing in the wrong order, okay? Because I contend that people need to start their self-directed Roth IRA start. That's their first account. And it needs to be the first account up to the max funding schedule, which is $6,000 this year. So if you're foregoing your benefit to contribute to a Roth IRA to go with a taxable account, you're doing it backwards. So it's not necessarily Robinhood I hate. It's the fact that a lot of people gravitated toward Robinhood and just opened up a taxable account because they thought that that was the right thing to do, and it's not. It's the ass backwards things to do, okay? So yes, that's why I kind of hated what it did to a lot of people, is because it put thousands of people awry. It really did. All right. I use Robinhood to swing trade. It's fun. That's good. Good. Have fun. That's awesome, man. When the market goes down, man, I'll ask you if you're still having fun. I'm going to get my son a Roth as soon as he hits 18. That's real smart. 18 or maybe sooner with a custodial. Yeah, you can do the UGMA, certainly. Uniform Gift to Minors Act. So if you Google that, you'll see what that's all about. He will be legally entitled to that money. Or you could do the 529, of course, for college. But it sounds like you just want to do cash into a Roth. That'd probably be the best bet, I think, there. So really, really good. I like to hear stuff like that. I do the same thing for my kids. The Roth M1 is fun to use. I agree. I like it. It's cool. It's one of those platforms that actually kind of promotes passive investing. It's not really that great for just trying to like rip and tear like you can in Robinhood, and especially First Trade, but it kind of helps new investors just invest your money and keep it in there, because it's kind of a pain in the rear to try to finagle your pies around and try to trade in and out of stock, and it throws the balance all out of whack. And it's better just to build the portfolio and then fund the portfolio. That's the best way to use M1 Finance for sure. I have another question, Ryan. I know you have 3M in your top 10 stocks. Yes, I own 12 shares, 12 and change right now. Stocks you own forever, but honestly, I'm afraid of 3M here. Would you still be buying here? No, I'm not buying here. I'm holding. Don't forget the option to hold. And remember, last week I was in the black with 3M. It kind of snuck up on me, while it was a forgot cornerstone of my portfolio, it was making very, very good slow money. Great dividend payer. It just went through a really bad quarter. That's all. It went through a bad quarter last time. So this is the second swoon that I've taken 3M into. I'm okay with it. I'm okay. I own a lot of other industrial names. Raytheon, Northrop Grumman, just to name a couple. UTX has just been on an absolute tear. Nobody comes on and says anything about UTX. I've been recommending UTX on this program for the last freaking 2.5 years. Nobody ever says, thanks for that, Ryan. That's awesome. I own United Technologies too. Nobody. Everybody wants to beat me up over 3M. No, hey, at least I'm honest with my stock picks. I do own 12.12639 shares. So, and we're down $100 for crying out loud. It's not the end of the world, Don't get emotional about stock. It'll continue to pay me dividends through this, and they'll figure it out, and it'll go up in 6 months anyway. Not the end of the world. So if Robinhood ever decides to do fractional shares, I'll switch from M1. That'd be interesting. M1's the only one that does it. That wouldn't be the only thing that would allow me to switch from M1. Again, the Robinhood not offering retirement accounts, that's a big one. So just look at how Robinhood really makes money. Yeah, that's an interesting one. My main account is TD. That's smart. A lot of people are really, really happy with TD. It's cool because I can turn those opinions back to you guys because I hear them all on all the brokers, who's working, who's doing what, who's doing the incentives, who's better to go with. So really good stuff. I know people said it and forget it, but I love looking at my portfolios every day. I do too. And if you love it and it makes sense for you, do it. I'll say it again. If you love it and it makes sense to you, do it. And I'll go so far as to say it's right. Okay? You're not going to come on the Independent Investor channel and have me tell you that's wrong. You know, you're not abiding by this rule. Nah, it's self-directed investing, man. You can do whatever you want. I don't make moves, just allocate from those doing well to those doing bad. The ones doing bad, I buy more of. That's legit, man. If you've got the discipline, I say, man, I don't know if you're a woman, I'm sorry. But listen, if you're doing that, that takes a lot of discipline to do that, and I commend you for it. You're doing exactly what I do. It's awesome. And if it's working for you and you're building wealth, if the wealth is going up and not down, you're doing it. We'll all be at the finish line having a Mai Tai in the Caribbean someday. Seriously. Living the good life, man, for sure. Yep, because you only get to live once. You do. So make sure you're doing right by yourself to start, and then do right by others. And that's what this is all about for me. All right, guys, with that, I will kind of try to wrap it up. All right, a little bit. Great freaking conversation tonight. I hope you enjoyed the link between getting folks. I know there were some new investors in the group who probably appreciated over my left shoulder here, the barriers, how we use some of the tools and solutions, some of the links to the solutions that we offer, man. These are real solutions. You just got to get out of your own way to see the light, get to those solutions on the other side of the house, man, for sure. Tesla's volatile with a lot of drama, but that may be because it presents monopolies the EV industry and might be under attack by other big names. Yeah, I agree with that. That's the smartest comment I've seen on Tesla. Maiko, thank you. Appreciate that. Good stuff. What are your thoughts on water companies? Geez, I tell you what, I've been looking at American Water Works ever since it was at $50 freaking. It's doubled. I'm all about it. I think it's fantastic. I think it's a great utility. American Water Works might be held in the utilities ETF. I'm sure. I'd have to look through the holdings in VPU, which is Vanguard's utilities ETF, which is, I do own that. I own it in 2 places in the portfolio, so I am exposed to AWK, but it's a phenomenal freaking stock, phenomenal company, phenomenal stock. I don't know what they pay as a dividend, but they're really good. I've watched them double in the last couple of years, so just be kind of careful buying it here. Last I saw it was at like 105, 106, right? Yeah, sure. Great company, though. Really good stuff. Dave Ramsey's a lunatic and is afraid to go bankrupt again. It could be. I mean, to each his own, I guess. Everybody's in it for the money, I guess. I guess that's just what everybody wants to do, and that's just the pursue money at all costs, right? Yeah, step on whoever you can step on to obtain money. That's the idea. That's the definition of success in life. Is that what we're saying? Yeah. I don't know. I beg to differ. So I do a lot every single day, and a lot of it has to do with, doesn't have anything to do with money that I do every day. So that's some real talk. He's an affiliate promoter. Smart. That's exactly correct. That's why I love Brent. That's why he comes on here and helps me, because he's like-minded like me. He can think for him damn self. He doesn't need somebody to tell him how to think, me included. I respect people like that. That's awesome. Okay, down here. So yeah, Investment Future Finder. Dave has helped a lot of people get out of debt. I would say that a lot of people have helped themselves get out of debt as well, potentially using some of the strategies. I would say if you want to get out of debt, a lot of people need a little bit of financial coaching, a little bit of encouragement, etc. But I know people who have got out of debt by paying off debt. I hate to be smart, but I'm serious, man. I'm one of them. All right. Used to be in debt. Didn't know who Dave Ramsey was. The way I got out of debt is my minimum payment on my credit card was about $120. I'd pay like thousands of dollars on it, and I got myself out of debt. And my debt to income ratio now is zero. Zero. The average in the US, they say that a good debt to income ratio is 20%. That's absurd. Okay? So just a little bit of real talk, a little bit of opinion from myself to offer. I'm reading The Millionaire Next Door. Good stuff. I'm cruising down. Bill Williams is in the group here. Another fellow. Yeah. Let me cruise down and make sure I got to these comments here, guys. Thank you so much. It was a great group. With that, I'm going to kind of sign off a little bit. We're at about 1:50. If one of these questions catch my eye, I have my TSP and Roth IRA long-term, okay? Just need to be able to make it there. For sure, Wesley. Thanks for stopping in and mentioning that you invest the same way I do. I have the TSP and the Roth IRAs as well. Financial investment broker you guys use. Talking to Brent. I've got my restaurant owner, Greenhouse Grill and Smoker toward the bottom. Hi, Ryan. How are you still utilizing First Trade? I am. I just surpassed. I went over 4,000. I haven't had the account that long. I've got it set up for a DCA. I did my First Trade video where I chronicled the holdings in there. I haven't sold any of them. Those were the holdings like Oran and Nokia and Fortis, a utility company, owned some Halliburton in there. I've got about 15 holdings in there, I guess, give or take a few. Regions Financial, SunTrust Financial, some other random healthcare, some stuff like that. And really good dividend payers, smaller capitalization companies. It's been growing quite well. I don't know how the performance is going year to date in it. I'm up about 5% in the Spider portfolio with M1. I don't know where I'm at with First Trade. I don't mind chronicling that video again, but again, I haven't changed anything in there. It's just went above 4,000. So we're on our way to 10. That's why I'm doing it, to prove a point. It's not about getting to 10 grand. I could care less about the money. It's proving a point that it is in fact possible. And for a lot of people, that's a barrier right here. And remember the theme tonight, guys, if you're still tuning in, a lot of you guys are signing off right now. And I want to wish you guys a great rest of your weekend. The whole intent of this message was to break through barriers. And hopefully you got something out of this message. And I will catch you guys next Friday. Thank you so much for tuning in. Thank you for the hand clapping, the one and only Doug Whitaker. That's pretty awesome. Guys, have a great rest of the weekend. I'll be signing off now. I'll catch you next Friday. Thank you so much.